2017. Master the Markets. My name is Rishi Patel, co-founder Master the Markets, the Elite Traders Conference, and the Traders Open Day. A very warm welcome to all of you joining us here this morning, bright and early on the Monday. I'm just going to show you an agenda for what we'd like to achieve over the next 3 days. We'll give you a rough idea. We may not stick to this rigidly, depending on how many people are joining us. Normally there's quite a large number, but depending on how many people are joining us, the way in which people are picking things up, the pace at which we're moving, we'll definitely be able to perhaps even add more content than this, or go into deeper levels of depth on each of these topics. So certainly this is one of the things that we want to be able to trade and go through. So the live trading week agenda looks a little bit like this. You can see we're starting here this morning on the 24th of April 2017. We're going to take this from Monday, Tuesday and Wednesday mornings. We're going to be here with you. I'm also going to be sending you a link to be able to join our end of day trading webinar as well, where we're going to be trading the 80% RB trade strategy, which I know Simon has spoken a little bit about in the emails you've seen some account statements for as well. So I will do that certainly, but certainly the intraday trading strategies that we're going to be going over we're going to be trading with you live, Morning Glory, specific versions of it. So if there are specific trade setups this morning, then we're going to begin with an analysis of that. But certainly the other intraday strategies that Thiru will be going over, certainly stops to cash, 15-minute swing profits. I'm also going to be going over the profit expansion, which is traded around insider bars. It's one of the proprietary strategies here at Master the Markets. I'm also going to be going over the dynamic breakout, which is a foundation level concept which all of our strategies are built. So very, very important to have a strong understanding of that. In fact, let's start with that this morning because the other strategies are built on that. And then, of course, I'll be looking at the 80% RB. So we're going to kick off this morning with the live trading session UK. We're going to run an analysis of the markets. We're going to be looking at the stops to cash strategy. So Thiru will guide you through that and the basis of it. He'll obviously then take a Q&A. Then I'll take over from there. Of course, we'll be placing live trades as we go throughout. And then I'll be doing a review of one of our end of day trading strategies called profit expansion. And then I'll take a Q&A and we'll look to wrap up just in the lead up to 11 a.m. So that's where we were at. If there are any questions, expecting lots of interactivity. What we love over here actually is the interactivity. So we always appreciate that because that allows us to understand exactly where you are, the types of questions you're asking, helps us to gauge how much depth we can go into, and that always helps. So please, we'll be asking lots of questions. As with any Master the Markets presentation, there'll be lots of prizes, there'll be lots of games that need to be played. So just bear that in mind as well. We're going to be very interactive, and you'll have an opportunity to come and sit with us and work with us live on a 2-day trading course. Certainly for those of you that are in the UK, even if you're not in the UK, we've had people fly in from different parts of the world to attend this 2-day trading course. So and it is superb. You'll learn all of these levels of detail. And we'll go into all of these strategies in a lot more detail. We'll show you lots of examples in a larger period of time than we have over just a few hours. So there's going to be opportunities this weekend to certainly win some prizes. So good. Without further ado, what I will look to do is just minimize our agenda and then just go over. We're going to be kicking off, as I say, this morning with a live trading session. So both myself and Thiru are going to analyze the market. Thiru will be primarily looking at the pound against the US dollar and the dollar Swiss franc. I will, of course, be looking at the euro US dollar. We're looking for trade opportunities intraday this morning. So we'll do an analysis with you. We'll show you how we're doing that analysis, and we'll place the trades with you. One of the things that we do here at Master the Markets certainly is trade live. We've been doing that now since April 2012. We've traded the market every single day on a live basis, either end of day or intraday, and exposing the exact trade levels to our clients with complete transparency. Ability to be able to see the exact entry level, not just zones or analysis, but exact entry levels with exact stop losses and exact exit points with trade management as we go throughout, and you'll get a small sample of that over the next 3 days. And I'm really looking forward to working with you all over that period of time. Before we get started and jump into the analysis, are there any questions that we can handle up front before we kick off this morning? I'll put myself on mute for just a couple of seconds to give you an opportunity to ask any questions. Okay, great. Doesn't look like there are any key questions, burning questions coming in, which is great, which means we can move straight over towards our live analysis. I'm going to be starting by looking at the Euro US dollar. So just to give you a heads up, what we're looking for at this time are the key levels in the markets. We're trading intraday, and we're going to be trading a strategy. I'm going to do this with you all. A trading strategy which is called the Morning Glory. Now, what we're going to be trading with you is a strategy which we call MG 2.0 Pref, and this is a key trading strategy that we use here at Master the Markets to trade the market intraday, and it's a superb little trading strategy which allows us to engage the market on a 1 hour chart, and obviously use quite tight stops. Move towards quite large profit targets. And what we'll do as well is to show you the historical results for the Morning Glory over the last year or so, and be able to show you, how this has performed, the concept behind it in a little bit more detail. And when we go over the stops to cash section trading strategy just there, which is very tightly linked to the Morning Glory 2.0 Pref. So I'm going to start by doing that. So what we'll do is, before we normally kick off the Morning Glory actual trades, what we need to do is a key analysis. And the way in which we do our analysis here at Master Markets is all orientated around the 1 hour chart, as I've already said. But what we're looking to do is we're looking to analyze key levels in the market. So the key levels that we're actually looking to analyze are the range of the chart that we've seen a move off already in relation to ATR. We're looking at the previous day's high and low. We're looking at a concept which we call the stretch, which we'll go into more detail about as well. We'll also be looking at the range of the current chart from midnight through till from midnight last night until 10 a.m. this morning. So we're looking for all of those things, and I'm going to draw those all on the chart with you right now. So let's start by looking at the daily chart here on the Euro US dollar, because the daily chart is the one that gives us an idea in terms of which way to actually take price in relation to the previous bar. So we judge that very simply by looking at the 2 daily bars and looking from close to close to gauge the momentum. Now, I can see at a glance here very quickly that in between the 2 previous bars, we've got quite close closes, which means to say that the close of the previous bar, if we say, for example, is 1.0707, and the close of the next bar 1.0723. So actually there's only a 5 pip difference in between close to close. Is that clear to everyone, or are we moving too fast at this stage? Okay, we're good to carry on. Fantastic. So that's one of the first things we look at on the daily chart. We're looking at the close to close. So that's an important reading for us to be able to take. We've got the close to close that gives us an idea of how we can work with the following day. So one of the things I'm going to do here is I'm just going to, let's bring back our 1 hour chart. And let's go back over to daily over here. So the daily here is going to, I'm just going to drop onto it an ATR, which obviously is an indicator that helps us to gauge range. Now, we don't use indicators here at Master the Markets. Generally speaking, the only indicators that we use are ones that are purely based around simple price. And the ATR, of course, as you should already know, or more than likely, I'm sure, is one that just gives us the average ranges of the prior 10 days. In this case, 10 days we've set it for. So if we look at the ATR 10 reading for the previous day, you can see very quickly that the ATR 10 is coming up with, let's have a quick look at where my data window is gone. There we go. ATR 10 reading just here is 59 pips. Now, if we take the ATR 10, which is 59 pips, and we multiply it by 0.2, you'll see we get 11.8 pips. Now, the way in which we gauge momentum here is by looking for the difference from the close to close. So in this case, I've already said to you that the close minus the previous close actually is only 5 pips. And so I needed that close to be more than 11.8, i.e. 12 pips or more. And you can see that this one isn't, so we wouldn't actually take a trade around this today based on the morning glory strategy, because the closes are a little too close together, telling me that there isn't so much momentum in the market. So quite simply, all I've done is taken the ATR 10, multiplied it by 0.2, and gauged it according to the close to close. Now, what I will do in any case is I'll make a note of the ATR 10, because that's going to help us with the other calculations, which is 59. And what I'll do is I'll switch over to a 1 hour chart, and we can quickly have a look actually as to where we can expect to see the euro dollar move to today. So we generally look for 0.7 and a 0.8 range on this euro dollar. So what I'm going to do, I'm going to draw with you the 0.7 and 0.8 range as of today. So if we look, and if you bear with me all just one moment, I'm going to go ahead and pull open a journal which will help me to do these calculations automatically, which I'll screen share with you in just a couple of seconds as well. Great. So okay, let's have a quick look just here. So right, punch this in, Euro USD, and 24th. So obviously we don't have direction just yet. Now it's asking me for the previous day's ATR, which I'm going to punch in as I already said, 59, which means that the 0.2 ATR is 12, 0.7 is 41, 0.8 is 47. So what we can do quickly is just draw our ranges from high to low in terms of that. So 41 pips from the high. 109.09 is the high. Take away 41. So 108.68 is where our ATR 7 would be, 0.7 ATR. Let's go ahead and draw that on. 108.68. Okay. So that is our 0.7 ATR. Let's have a look at where our 0.8 ATR would be. It would be 47 pips away. So we'll take 47 away from this figure. 108.62. 108.62. So that is this level here. So now one of the things you can see, and I'm going to zoom into this now straight away. There we go. So one of the things you can see here straight away with this euro-dollar chart is that it has already exceeded in the first couple of bars from midnight. It's already exceeded both the 0.7 and the 0.8 ATR levels. So that's already happened just there. Let's go ahead and put in the other key values. So we'll go ahead and put in and calculate the stretch here. So you can see from midnight through till now, we've actually got a range of 92 pips on this euro dollar, which is exceeded our 0.7 and 0.8 ATR. What I'm also going to do is key in the stretch values just here as well. A couple of people mentioning that they have slightly different data. That's normal. It will vary from broker to broker. So not really too worried. As long as you use the same broker consistently, that's what's going to make the difference. So let's go ahead and just quickly do a calculation here for our stretch values. So the stretch today I can see is, let's have a quick look. 10882, takeaway 10894. We'll go into more detail about these concepts a little later. The stretch here is currently 12. So I'm looking for 2 times that amount. So what we're looking for is from the open 12 pips, from the close we're looking for an additional 12 pips. We'll multiply this figure by 2, which is going to make us 24. 24 pips from the open, 10906. So looking at this from the open, this is really important. When we're making stretch calculations, this is actually, when we're looking at stretch calculations, we're actually looking at the figures from the open. So 10906 plus 24. 10930. So our stretch to the upside is 10930. So that's here. I'm going to be labeling all of these shortly as well to make them very clear. Then let's look at our stretch to the other side. So 10906, take away 24. 10882. Okay, so 10882. That's the stretch to the downside. So you can see it's already as well surpassed that 2 times stretch on the euro dollar as well. So in a nutshell, what we're saying here, what this is telling us is that we've already seen quite a large range being formed on the euro dollar today, and there's obviously a very obvious reason for that is because of the gap. There's a very large gap in between the price from Friday and this morning, which we'll also look at a little bit later. Good, so we'll carry on. So we'll just quickly draw in the range from midnight through till now, which is this range just here. What we'll also do is just map out where are the previous day's high and low. So previous day high is on this swing high just here, 107.36, 107.36, 107.36. Below 106.81, 106.81. There we go. So that's previous day's high and low, just there as well. And that's pretty much all I need to do now is just draw in my ATRs from this low point up until the high. So the low here, 108.19 plus 41, 108.60. Okay, and we can see that this, in this case, is going to yeah, 108.60, absolutely spot on. So that's the range we can expect, and that's already formulated. So we'll actually take that out. So I'll put in just these labels now very quickly, and then Thiru will take over and do an analysis of the pound dollar. So let's go ahead and key this in. So we've got the 0.8, you've got the 0.7, you've got then the stretch values. So we've got the previous day's low, the range is there. Previous day's high, you've got there. These figures are way off this morning. You can see they're all over the place, and the reason for that is because of that gap. But regardless of the gap, the concept still stands. And what you can see here is that the euro dollar has already formed well beyond its 0.7 and 0.8 ATR. You can see that very clearly just here. So that's the price map this morning for the euro dollar. This gives us an indication of what to do. Now, into tomorrow, more than likely, there won't be a gap, and so we'll be able to do a tighter analysis, and there possibly will be a morning glory opportunity will set up tomorrow. So, but obviously, as of today, you can see that we've already well over exceeded our 0.8 ATR. In fact, we've almost doubled it. So the euro dollar has already fulfilled its range, which is what the morning glory strategy is all about. Because it's already fulfilled its range, there is no opportunity live on this morning on the euro US dollar. So that completes my analysis, which leads me to pass over now to Thiru, who will also do a live analysis of the pound US dollar.
Okay, a very good morning, everyone. So it's awesome always to be back on the live trading week with Simon Campbell's crew. It's always an honor to present to you all. Thiru Nalpan here, founder of Master Markets Illustrates Conference and the Traders Open Day. Okay, so today we are at the cable chart. I'm aware of time 4 minutes to 8 to the opening of the UK session. So I'm just going to tell you quick analysis, then we can go through all the concepts later on. I just want to do a quick check if you all can hear me okay and all. If you can just type in yes, and I can see that, and I'll know that I'm not just talking to myself, really. See if you all just want to, yeah, okay, good. I can see all, everyone saying that. Okay, that's great. All right, now, let me just do the analysis here. All right. So I'm just going to do a quick one, and then I'm going to go through in detail later on. Let me just bring up this annotation marker so that I can then draw on the screen so that you all can see it much more better. Now, as this coming up, one thing I do want to mention is that traders, you know, everything that you do in trading is based on probability, so you must have your stats. And over the 10,000, 20,000 traders that we've come across and trained and coached and talked at seminars and conferences, what we have found is that a lot of traders do not know their stats. Not only do they not know the stats, they also do not know the three-step methodology for trading as well. So there's a lot of big gap in knowledge that they have, and they develop bad habits, and they carry on with that. Now, one thing I want to do mention, you see, in terms of probabilities that you should know. First of all, we take our direction. Direction is very important, right, as traders here. Our direction for today is going to be on the upside, and the reason for that is we usually take it. So you see, today, this is today's bar, and this is yesterday's bar, previous day bar, right? And that's a Friday bar. So today's Monday, this is Friday. Now, in terms of that, we usually take the bias from the day before, the current day. So over here, what we have seen is that we look at the close over here. We look at the close, and we see if it's above a certain range. We're going to go through in much more detail later on, and then we take the probability. Now, if it closes above a certain range of its bar, then there is a 70% probability that will continue to take out the high of that bar, okay? And if it does take out the high of the bar, then there's another 70% probability that it will continue on to make at least 0.6 to 0.7 ATR. Okay, so that's what the probabilities. Okay, so that's what we need to be looking at. We'll go through that over the next 2-3 days as well. So in terms of that, I then correlate that information onto the 1 hour time frame. All right, and the price map as already Rishi has gone through, and that's what I've drawn over here as well. Your previous day low and high is very important. Okay, now in terms of midnight to midnight, yeah, the previous day high has not been broken yet. So I'm just not looking at the daily because I alter the timings on from midnight to midnight, which is UTC. That's very important as well. Now I'm taking a look at the 7 a.m. bar over here, which is just closed 7 a.m. to 8 a.m. Now what we are going to be doing right now, traders, because it's not reached this 0.7 or 0.8, we're going to be putting a price level on the high and the low of this 7 a.m. bar. And I'm only doing that because of a specific setup. Okay, I won't be doing that all the time, but for today, yes, we'll be doing that. Now, for the high of that 12792, 12793, right? So 12793 plus 4 pips is what we are looking for. 12797 is what we will be looking for. I'm just going to punch in all these levels here. And so 12793, because I'm rounding it out, 127926, 12793 plus a 2 pip leeway plus a 2 pip spread, and the low is going to be 12771. Okay, 12771. That's what we have. And finally, the target, it's going to be, I'm just going to put it at 0.8, 12773 plus over 0.8. It's going to be a 12856. Okay, great. All right, so that's what we do have. And the 0.8, as I can see over here, let me see, 12856 as I've over here, right? 0.8 level, right? Okay, cool. Now, so that's what we do have. I'll just punch that in very quickly here. Now, let me just put in the chat box. Okay, great. Now, so the cable entry level today, what we are looking at, is going to be at, so you're going long, and the entry is going to be 1.2797. Stop loss is going to be 1.2771, and target is going to be 1.2856. Okay, that's our levels over here, is what we are looking at into today. But of course, just would like to put in a disclaimer at this point, this is just purely for educational purposes. Okay, because since we're not FCA regulated, I'm just sharing these levels in terms of just the educational basis. Right, so 12797, 12771, 12856 is what we are looking at. Okay, in terms of cable, so we'll see how that carries on to be. But do remember, traders, that we'll be looking into this as the day goes by, because I will not be taking this trade if certain scenarios happen within this setup. Okay, because we are very clear of the correlations between the intraday and the daily chart and how a bar should form. Okay, so we are very, very clear on those bases. So because of that, if certain scenarios happen, we will not be taking the trade anymore and be cancelling the order. Okay, we'll be cancelling the order, and we will inform you when we do that as well. Now, a critical level, what I'll be looking at will definitely be the low of this bar. If the low of this bar is taken out, I will then cancel my order and wait for a new setup altogether. Or if the low of yesterday is taken out, again my bias will change for the day, and I will not take out any more trades anymore for the day as well. And I'll be looking at time as well. If a certain setup doesn't happen within a particular time, I would not also place the trade as well. And why is all of that, traders? Because we have probability set out for each of these time factors. Your stats research is very, very important. As in the last round the clock trader live, when we spoke, when Simon Campbell organized it last year, which is also coming up in about 2 weeks time as well, we're going to be speaking again as well. I did mention on the 7-step process, before you start to trade live and scale and reproduce a strategy. Okay, I did talk about the 7 steps, and one of the first steps in the 7 steps is so critical, is the stats validation before you even start to formulate your rules for the strategy. Okay, so this is all what we're going to be going through in the 3 days, right? All right, so now enough of me talking. I'm just going to mute myself for the next 5-10 minutes. What I want you all to do, just as a very quick exercise, is understand first our price map on this chart. What's happening, what's going on, what did we do, why did we do that, and ask any questions that you may have. And also, you can also look into the price levels that we have just given you as well. All right? Okay, great. I'll just mute myself for the time being, and then we'll resume it shortly.
Okay, so we have a cable position currently running. We're triggered into a trade long. Let's have a quick look at that now. So you see we published the levels at 802. Everyone should be able to see that. Am I right in saying that everyone can see the trade that we placed at 802 on the pound US dollar entry 127.97, stop 127.71? Punch a Y into the chat box to let us know that you can see that. Otherwise, obviously, there's something that's fundamentally wrong. Okay, great. Yes, thank you. That's brilliant. So we're 128.56. You can see those are all the levels that are being published here live. So we're in that trade now. We're long the pound market at the moment, and so we'll continue to monitor that as we move throughout. As that is the only trade for the morning, what we'll do is we'll let that run while we and obviously we'll look to manage it as we move through the morning as well, all the way up until the point where we take it up to 11 a.m. We'll go ahead and manage that with you now. What I'm going to do is I'm going to just switch over to the next part of the agenda here this morning, and that is all in and around. So here's what we've done so far. You can see we've done the UK live trading session. We've got the pound dollar trade placed, so that's in the market already. And we've got the stops to cash strategy coming up for you next, so you can have a look at that, and then there'll be a Q&A in and around that as well. And obviously we'll carry on managing those live trades. I'm going to go over this morning, I'm going to go over the dynamic breakout trading strategy. So I'm going to do that there with you this morning. So let's go ahead and actually key that in just here, because that's going to go there. So we'll do profit expansion on the last day, in fact, is what we'll do. Great. Okay, good stuff. So what we're going to do, the reason we want to go over dynamic breakout this morning, which is an end of day trading strategy, is because it is that end of day trading strategy that we will actually build all the other trading strategies on top of. And that's really the thing that gives us the conviction to be able to trade the market consistently. And the key word here really is consistency, because what we're looking to do is get a cumulative set of profitable results and not just one-off results. So that's what we're looking for. Let's just run a quick screen share just here. Right, okay, looks like Thiru is still sharing on his end. Let's get him to just release that for a second. Okay, so let's run a quick screen share here. Let's see. That's me share my screen. Fantastic. Let's have a look that you can see the right screen. Great. So yes. So this morning, of course, we're running the live trading, the UK live trading session. We've already placed trades this morning. You've seen that all happen live on the stops on the Morning Glory 2.0 pref strategy. There we go. The stops to cash trading strategy is an intraday strategy which Thiru will be going over shortly on a presentation. We'll teach that to you, the ins and outs of it. I'm going to now go over one of my end of day trading strategies which we've built here in the live trading room, which we use actually not only as a strategy but more as a concept on which we've built all other trading strategies. So let's go over that now. And I can see a couple of questions coming in just here as well. Keep those questions coming in. When we get to the appropriate points in the presentation, then obviously we'll be happy to answer those as we move through. Not a problem there whatsoever. Okay, good. So the dynamic breakout trading strategy is the one that I'm going to be going over. Because we're going over trading strategy, I should let you know that, of course, trading on margin carries a high level of risk and obviously may not be suitable for investors. The high degree leverage can work against you as well as for you. All information provided is for educational purposes only. Vedanta Trading Limited and the presenters are not financial advisors and do not recommend any of the securities of any kind. Any securities that are mentioned are cited only for the illustrative and educational purposes. You should be aware of all the risks associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. My name is Rishi Patel, as I said, co-founder, master of the markets, the Elite Traders Conference Traders Open Day. Background in computer science. Had a video production business for several years after that. Didn't quite pan out the way I wanted it to, and didn't really work out for me in the 2008 recession as well. We saw a lot of businesses going under, including mine. Slowed down a lot, and so I needed something else to make an income from, to make a revenue from. So I looked at financial trading, and I started that journey off in 2008. And I started to trade the market on a part-time basis for a couple of months. In a very short space of time, I was able to make more money in that 15 minutes a day, end of day trading, than I could in my full-time video production business. And as a result, I decided to do this professionally. And so we have, on the team, we have 60 years plus worth of cumulative experience, including our mentor, who we work very closely with. But other than that, between myself and Thiru, just under 2 decades of experience trading the markets. And that's the key just there. So as I already mentioned, we are long on the pound dollar. This is very much a live trading week webinar, and I'm conscious of that. So we are long pound US dollar, and we call that trade here live, and that's the key thing as well. So we did call that trade live. We called it before that triggered. You can see that. So we're going to manage that with you, and its exact entry stop target you can see that we've published just there. So pound dollar has triggered. We will manage that with you as we move through the morning. Thiru will of course be keeping an eye on that as I present, and of course he will be providing some updates as we move through the morning on that. Now I should just let you know before I continue with the presentation that of course if you would like to be in on the trade management and understand how we're going to trail the stop losses into the rest of the morning beyond 11 a.m., then you have the opportunity to do that. We have set up a WhatsApp broadcast list which we can go ahead and send you out updates for by way of trailing stop losses. If you would like to receive those updates for those trailing stop losses, there's 2 key steps that you will need to do. The first one is to add the Master of the Markets phone number to your mobile address phone book. Otherwise, you will not be able to receive updates. I am punching the Master of the Markets business phone into the chat box now. So that's the Master of the Markets business mobile. We use that to send out WhatsApp updates by way of trade management, because we don't want to just leave you with the initial criteria. We want to show you step by step, and this is what we do professionally as well in all of our live trading rooms, is show you step by step how we manage the opportunities. So do add that to your phone book. That would be step 1. Add that number to your contact list. The second step, of course, here is to submit your mobile/WhatsApp number. Bear in mind, this can be anywhere in the world. Someone says there's an extra digit in the 077456553. No, it looks good to me. Bear with me just one moment, I'll confirm the number. But that's the first number that you need to add to your contact list. I may change that if there is an extra number in there. bear with me while I double check. That may not be the correct number. I haven't memorized it. So I'll come back to you on that. And then the second step is, of course, submit your mobile number. If and only if, of course, you'd like to be in on the updates that we're doing. That's what we're going to be doing as we move through the morning. So yes, we'll do that. So let's. You can send across your mobile number on a confidential message on the chat box by punching that in. If you type that in, then obviously only we'll be able to see that. It's kept confidential. Details are not shared with anyone. If, of course, you would like to receive WhatsApp updates, no obligation to do that from your end whatsoever, as we will be managing the trade well into the 11 a.m. When we close this session. So let me just double check the number. Slight correction on the number there. Someone did identify, of course, that it was an extra digit, and there was an extra digit in there. So the actual number 07456553548 plus 44 at the beginning, of course, if you're not in the UK, and you'll be able to receive those mobile updates as we move through the session after 11 a.m. Okay, so what makes Master the Markets unique? Transparent track records will show you start to finish all of the trades and the opportunities that each strategy has transparently, the winners, the losses, and we'll do it all in real time as well. So as you've seen this morning here on the pound dollar, we'll keep a journal for this live trading room as well, this live trading week that we're running here this week. We'll log all of those trades transparently as well, and even if we end up with a net loss, we'll publish that at the end and we'll analyze it with you. We'll take the market feedback, we'll grow it, we'll adapt it, and we'll move forward. And that's what we do in trading. Everything here is research backed, is fully quantified, is fully statistically driven, and that gives us a set of probabilities which are very strong, and that's the key there. So the WhatsApp number, one more time, I have keyed into the chat box. You can see it. I'm going to put it one more time again. So it's Master Markets 07. In fact, just 07456 553 548. I'll key it in one more time just there. There we go. That's the number that you want just there. So 07456 553 548 plus 44 at the beginning if you're not from the UK. Open door support here at Vedanta Trading as well for our live trade mentorship and live trade mentorship advanced members. Good. Do you we have a brand new website which we've set up. It's well worth checking out, and I'm a little later on today I'm going to direct you to that. If you want to be in on the 80% RB trades we'll place this evening, you do need to go ahead and register on that site to join our live trading room this evening. So you'll get a link for that. As I already mentioned at the beginning of this, there is going to be interactive exercise all the way throughout all of our presentations. And the reason for that is because, of course, we want to make sure you gain the maximum amount of value, the maximum amount of benefit from these webinars, which we are running over the next 3 days. We want to make sure that you retain as much as possible. And so we encourage you to take part in interactive exercises should you wish to win a ticket to our flagship 2-day course, Traders Basecamp, on which we go into these concepts in much more detail. This is an intermediate workshop for which we will go into depth in terms of by way of these concepts. Of course, we can do a lot more in person than we can over a webinar in just 1 or 2 hours. We can just go over a lot more over that 2-day period, and so we encourage you to attend something like that, a superb place to grow your trading skill. Okay, so in this session, I'm going to be going over, of course, some live trading in real time with real cash. You can see that that's already happening in the market, and we've already placed our first trade of the morning. I'm going to be going over 3 of 6 of the variations of the dynamic breakout. So that's one of the key things just there. And then, of course, I'm going to be running a Q&A as well. At the end, if there are any questions in regards to what I've gone over, that's key. Please do keep your questions coming in as well. Some of you are typing mobile numbers into the chat boxes. One of my team will be in shortly to accumulate all of that information. And then once that's been done, then of course they will be able to add you, of course, all onto our WhatsApp broadcast list. And once you're on our broadcast list WhatsApp, then we'll continue to send out trade updates for how these trades are progressing into this morning. So that's going to be the key just there. If you're typing in questions in regards to the trades that we're placing as well, please do keep them coming in. We haven't forgotten about them, and we're certainly not ignoring them. We're going to come back to you, of course, at the appropriate time. I want to go over the dynamic breakout trading strategy. I want to go over its concept and objective. The concept here of the dynamic breakout is to trade along with institutional money to capture momentum and swing moves in the market is the objective. So it's really a momentum-based strategy. We're basically looking to get involved with where institutions are placing their trades, their stop losses, their entry levels to drive the price higher and to gain momentum and gain extra added fuel in the market, take us up towards a target. And that's why we're trading this dynamic breakout. Is based around where institutions will be entering the market. That's what makes it work. So dynamic breakout, there are 2 types of breakout in the dynamic breakout itself. First of all, we should understand there are 2 types of strategy. So does anyone know the 2 types of strategy that you can get? Generally, actually, all strategies are broken down into 3 key categories. 3 key categories all strategies are broken down into. Does anyone know what these 3 key categories are? Just out of interest, punch in. Let's collaborate here. Let's punch in a couple of key criteria in which these strategies are broken down into various categories. What do you think those are? Got a couple of answers coming in. So someone has said a breakout, a retracement, and a range. That's actually pretty close to how we've categorized the 3 categories. That's a very good attempt. Anyone else want to have a gauge as to 3 categories in which we can break down all trading strategies? Okay, so good. Keep punching in those answers. We're just looking at the pound dollar just here, which you can see is progressing higher. So we have placed a live trade on that, and you can see that we are moving much higher in the cable market. Actually, we've got plenty of momentum coming in. You can see live on my screen here that that is moving higher. Of course, our target is in at 1.2856. So 128.56 is where my target is. Thiru did call that at 8:02, well before this move started. So that's one of the first trades for this morning. We're about 50 pips away from our target at this time, and we'll continue to manage that as we move through the morning. A little live update there for you. So a couple of guesses have come in on this. I'm going to answer this question. 3 categories in which trades have been broken down. So the 3 categories are: 1, you can get a breakout. Absolutely. So that's a type of strategy that you can categorize into. The other type of strategy you can get is a bounce off. It can bounce off of something. For example, it can pull back and bounce off of support, pull back and bounce off of resistance. It can pull back and bounce off of a moving average. So there is bounce off type strategies. So you've got breakouts where you break out from a level, break out from support, break out from resistance, break out from the high of the day or the low of the day. or you can look at bounce offs, where you bounce off of a key level. The final type is not generally spoken about in the retail space, which is arbitrage, which normally happens in funds and high frequency type institutions, where they're looking at forex arbitrage, where they're looking to take advantage of very tiny fluctuations, differences between prices from one place to another. So generally speaking, the retail space, two categories: a breakout or a bounce off. The dynamic breakout, of course, as the name suggests, is a breakout type strategy. Two types of breakout within the dynamic breakout. The first is what we call a trend defining breakout, the TDBO type, just there. The second, of course, is the trend established breakout, or TBO, in the dynamic breakout just there. So direction of the market has not yet been defined until it breaks out of the compression. That's a trend defining break. And in an established breakout, the direction of the market is already defined and is following a key established trend. And so these are the two types of breakout in the dynamic breakout. There are 6 variations inside the dynamic breakout, which of course the live trade mentorship advanced members all have complete access to, and they're able to see and break down any market into one of these 6 variations that moves in real time. Very powerful way of price analysis, because it gives you absolute conviction in which trend the market is, any time frame, any market that will work on. So these are very strong concepts. Please don't get this confused with just a strategy which has an entry, a stop loss, and a take profit. It is well beyond that. It is an entire concept, a foundation, a building block at the very base level on which you're able to build any trading strategy. And the crux of the dynamic breakout is the smart money indicator, which is defining in real time, in a fully mathematical and quantified way, with no redraws whatsoever, key swing highs and lows in the market, giving you the ability to have absolute conviction of what the trend is, where to draw your Fibonacci levels from, and 2, all in real time, making you the ability to place trades consistently and of course end up making money consistently as well. I'll go over that in more detail later on. As I said, if you understand the 6 variations of the dynamic breakout, you will be able to identify the trend consistently, any market, any time frame. It doesn't matter. It's just price. It's broken down into all of these key sections. That's what I want you to understand. So dynamic breakout, you can see we've tested the market, and before we roll this out, of course, we test the market, very important. And you can see that actually 5R, or 5% here, exit price 6, was the most profitable variation over 3 years. We tested the market. 64.38% was the net profit result for that particular trading strategy. And what I'll do as well is I'll show you the actual results from the dynamic breakout variation 4, which we trade in our live trading room every single evening. We call the market for potential opportunities on the dynamic breakout. The most recent one was on the pound dollar, which happened to capture the election move as well. 258 pips of profit in a single day based on the dynamic breakout variation 1 break. The variation 1 is of course a trend-based momentum strategy. The breakout is based on a swing high or low, and we're looking for a price structural failure in the market. So what does that mean? So you can see here, according to my diagram on the screen, what I have at this time is of course a downward trend. Does everyone agree that this is a downward trend, and that we can all see that clearly? Yes, punch a Y into the chat box. It also helped me to know that no one's fallen asleep and it's pretty early in the morning. Might not have even had a chance to grab a coffee yet, but I want to make sure that everyone's still with me. Great, thank you. So yes, superb. Let's move on. So let's move on. Let's grab the pen. So you can see here we're in a downward trend. Now this is the last lower high in the downward trend. This is a swing high. Now, what we look for in a variation 1 is what we define as a price structural failure, or PSF for short. And this PSF we're basically looking for a reversal in the overall trend of the market. Now look, we're looking for a key break of a swing high at this stage. So we've got the downward trend. We're looking for the price to reverse, form a new lower low and confirm it, and then move higher. And this is what we call a structural failure. Why is it a structural failure? Because you've had the downward trend making lower lows and lower highs, and then suddenly you've got a move against the overall trend, breaking the last swing high, taking us up and higher and giving us the momentum to the upside. This is a variation 1 dynamic breakout. This is exactly what it looks like. And what we can do is we can look at an example of a dynamic breakout variation 1 on the pound US dollar, and I'll show you the daily chart of the pound US dollar. You can see the variation 1 breakout that took place recently. It's just here. And so you can see the arrows on the screen, by the way, denote the master of the market's smart money indicator. This is an essential part of not only the dynamic breakout trading strategy, not only the dynamic breakout trading concept, but also the 80% RB relies heavily on the smart money indicator. The lift-off strategy relies heavily on the smart money indicator. And these strategies are all essential for us to be able to gauge and understand momentum. Have a look at my diagram on the PowerPoint presentation, which is here. So this is the arrow on this is the diagram of the PowerPoint presentation. Everyone can see this downward trend, and you can see the lower high and the lower lows that were created just here. Now, if we replicate that onto this pound dollar chart, we take that diagram, you can see the exact same thing has formed just here. Can everyone see that? That's the lower high just there. Here's your lower low. This is also a lower low. Punch a Y in. Let me know that you can see that that diagram correlates exactly with what I'm showing you on the PowerPoint. This is what we class as a dynamic breakout variation 1. Now, we entered the election move even before it was an election move. You can see we're triggered on that bar just there. Then what happened, of course, is the price did pull back, as it does, and then it moved higher, and then we captured that move. We captured 258 pips on that, and I'll show you that in the live trading room journal as well. Let me go ahead and pull that open. The live trading room journal, just so you know, is one in which every single trade that we take is transparently logged and recorded in real time. Every night in the live trading room, we open this particular trade journal, and we will analyze the market every evening for dynamic breakout opportunities. Here you can see one of the members of the team, his name's Lawrence, was calling the live trading room this evening, and he placed this trade on the GBP USD. His entry level is he's printed transparently here. In exactly the same way we've published the GBP USD Morning Glory trade. You can see we've given you the exact entry, stop loss, and target, and we do that every single evening. They're not just zones, it's not analysis, it's not me looking at a chart and saying to you, oh yes, if you had got into this chart at this price level just here on this low and got out on this high just here on the election move, you would have made 955 pips, which unfortunately I see a lot of in the trading space. We don't do that. What we do is we trade the market live and in real time. And that's exactly what we did. We called this trade well in advance of the date that it triggered. And we're in 126.17 we entered the market. If I show you that on this chart, 126.17, we are long the market, and we are taking our money off of the table on this opportunity just here. We took it off the table. 128.75 was where the target was. 128.75 was this price level. So again, you can see we didn't capture the whole move. We weren't interested in doing that either, but we did capture those 258 pips of upside profit, and that took just a couple of days from start to finish. 258 pips or 2R. Just there. And here you can see we've also printed the losses as well. So we also took a loss on this dollar Swiss trade as well, between 26 and 29. That's also been published transparently too. So it's not just about the winners. Everything here is completely transparent. You can see profit, loss, everything in real time. So that's the key. And that's the variation one. I wanted to show you that because variation one breakout, dynamic breakout pound US dollar. Okay, good. So we've gone over the variation one. As I said already, you cannot get this, you cannot trade or base or make any trading strategy without knowing with absolute conviction where your swing highs are and where your swing lows are. If you do not have that information, then you're guessing. If you're guessing, you're inconsistent. If you're inconsistent, you will not make money consistently. I'm yet to come across a trader who trades inconsistently in a non-quantified manner that's been able to publish in the way that we can our key account statements to show consistent profitability. And you'll all have seen the account statements that have come out on the emails which Simon has sent out. Those are our real-time account statements for the 80% RB trade strategy. So that's basically in a nutshell where it's at. That's what I wanted to show you very quickly. Good. So let's take that from there. So what we've got at this time is that as an opportunity. That's a variation one break. We've taken that in the live trading room in real time. Let's switch back to the presentation. I'll show you the next variation of dynamic breakout. Before we get to that, we have a fantastic opportunity for you to come and learn some of the in-depth details of some strategies. Not only some strategies, but also gain a very strong understanding of the way we analyze markets in detail. At our 2-day Traders Basecamp event, you're going to get the opportunity to win a free ticket to that event, as well as a discount voucher for the Traders Essentials kit. If you are able to purchase the Traders Essentials kit at the 50% discounted rate, we're going to give you a free ticket to Traders Basecamp as well. That's our intermediate/advanced trading workshop. We've now upgraded the content. You can see here initially I had beginner, intermediate workshop, but the content is very much advanced and it's nothing you'll ever have come across before. We're not going to waste time going into a lot of detail about support and resistance and OHLC bars and what moving average is. No, we're going straight into the meat of the serious content of what makes very, very advanced profitable strategies work, what makes them tick, how they're built, how bars are formed, what probabilities are behind certain patterns. You'll get to learn that highly exclusive content which we only share in this space. So I'm going to give you all an opportunity to win that. The only thing you need to do to win that, for those of you that have never seen a Master Markets presentation before, you will have to answer a simple question and you'll have to get it right in the shortest space of time before anyone else does as well. I can see many people are on the webinar this morning joining us here live, and so it will be the fastest finger first, I like to say, that will get to win this Traders Essentials kit, the 50% discount, which will then include a free ticket to Traders Basecamp. The question is, which exit was the best performing on the dynamic breakout in terms of R multiple? Which exit was the best performing in terms of R multiple? Okay, we've got some answers coming in. Fantastic. Yes, absolutely. Wow, okay. Brilliant. Okay, thank you very much. I think we have to close that off now. If you haven't managed to put your answer in, you can have an opportunity on another question. It looks like there's been a flurry of answers that are coming through just there. And we've got congratulations to say. Let's have a look at the list and who has come in first. Congratulations to Bookie. Very well done to yourself just there for getting the answer correct. What you need to do is send back your email address and mobile number to one of the teams that can get in touch with you so they know where to ship your Traders Essentials kit to, as well as the information for our 2-day workshop. So send across in a message your mobile number and email, Bookie. That's for you. Please do that and we will send you across details of how to claim your prize. Well done to you. Congratulations. Let's move on. Entry for the dynamic breakout. So you can see that the entry of the dynamic breakout is dependent on what we call the swing bar. The swing bar is the bar that has created the high or the low. So in the case of the pound dollar, you can see this is the bar here that created a high, and that's where we entered on the high of this bar. That's how we gauge the entry. Now, obviously, if you're entering long, we add spread, so we do the high plus 3. If you're entering short, then it's just low minus 1 is where we get in. Now, again, you cannot guess the levels for the dynamic breakout. You need access to the smart money indicator, which will, of course, allow you to get an understanding of where the levels are. If you guess, then your results will be random and not in line with the profitable results we've seen on the variation 4 dynamic breakout, which we have here in the live trading room. The stop loss on this particular opportunity is on the low of this bar just here. Low minus 1 is what you can look at just here. So you can see that the low minus 1 is where the stop goes. If we're going long, that's low minus 1. So our stop on this pound dollar trade based on that dynamic breakout would have been on the low of this bar just here. So that's our risk, 138. We're looking for, of course, double 260. So that's how we gauge where the stop and the target should be, just there. Good. That's how we work out the stop. The target, of course, we've measured. It was 5R, which Bookie guessed correctly, sending across their mobile number and email address. Now we'll claim the prize. Well guessed. There is actually exit number 6, which is 5R is the best exit. So 5% is the best exit. Although we found it was that was the way we want to do it. We then also found that the results that we were actually getting for 2R exit were actually quite close in real-time trading to the 5R, and so we decided to switch it to the 5R. However, you can use 2 times trade risk. That's what we're using in the live trading room for this just there. So we've already given you a heads up on the backtesting, and we'll show you the spreadsheets and how we backtest a little bit later. I want to show you the dynamic breakout variation 2. That's the single market compression. So let's have a look at how that one actually works. If we look at a chart, let's say of, we need something that's compressing currently. What do we have? Let's have a look at an example of a variation 2. Yes, we do actually have one just here, which is great. Okay, good. So let's go back to this. So a variation 2 dynamic breakout. So far we've covered variation 1 dynamic breakout. We've covered variation 1 dynamic breakout. Variation 1, remember, is all around how we're trading swing highs and lows. The break of swing highs and lows on a price structural failure. So where we had an established trend, we're trading against that established trend to break out in a new direction. Now the variation 2 is what we class as a single market compression. Look at this diagram and look at the last lower high and the last higher low. Can you see that the last lower high is well within the range of this previous compression? So if we were to draw it in a bar format, you can see that this lower high and this higher low, if it was drawn as a bar, is inside the previous range. Can everyone see that okay? Punch a Y into the chat box. Brilliant, absolutely correct. So you can see that the lower high and the higher low fully contained within the previous range. And yes, absolutely, some people are punching in words like triangle and stuff like that. These are all pseudonyms that are given for terminologies that other training companies have made up because they really just don't have a deeper understanding of what's causing this. It's not, the fact that it's a triangle is actually really irrelevant. What we really need to know and what we really need to understand is what the probabilities now are of the break and in which direction we want to trade it and how we position a stop and an entry. It's a compression, and so the compression doesn't necessarily need to form a triangle shape. but it is indicating accumulation. And really, triangle, flag, all of these other funny names that are given out for periods of accumulation in the market, where market makers are stacking up orders, which actually a lot of people really don't understand. And because they don't understand this core level material, unfortunately, they don't understand how to create a trading strategy to capture a move. And because they don't understand that, they can't make any consistent money in the market whatsoever. And it's really sad. But of course, on Traders Basecamp, we do go into a lot more detail of how these concepts actually work, why triangles work, why inside compressions work like this, and how we've actually used all of these knowledge to build profitable strategies. Because at the end of the day, being able to find triangles, things like that in the market really isn't relevant unless you can capitalize on it from a cash amount perspective. So that's the key thing to look out on the dynamic breakout just there. Let's look to move on with the rest of this morning. So there we go. That's a variation 2 breakout just there. And then a variation 3, which is the next one that I'm teaching you here, again, is a trend defining breakout, is extended market compression. Now, in an extended market compression, you have 2 or more inside compressions, and that is basically the equivalent. If you look, if I diagramize this, that's basically the equivalent of having 2 insider bars or a double insider bar just there. That's what you're going to get, and that is relatively rare as a signal. I believe something my mentor taught me a little while back. There's actually only a 0.2% chance of that pattern actually setting up on the daily just there. Only a 0.2% chance of that actually happening. The way that this is traded is to the upside, and of course we use the stop loss target criteria that we've already mentioned before. In terms of all the probabilities, in terms of which way it's going to go by a probability basis and all of that, in terms of exact numbers, we discuss that a lot more detail in Traders Basecamp. We'll teach you all of the different probabilities for where the market will go to at what time, based on our extensive research. Good. That leads me to another interactive exercise and another opportunity to win just one more time from my presentation, the last one that I have in my presentation, an interactive exercise to win another ticket to the 2-Day Traders Basecamp by purchasing the Traders Essentials Kit. It's 50% discount to the Traders Essentials Kit, which then includes a free ticket to the 2-Day Traders Basecamp, an intermediate/advanced workshop, which of course you can come onto and learn, gauge, understand how solid all of the material is, and then how you can then take it away and use it, not only to make your own profitable strategies, but to use some of the profitable concepts we've come up with already. Here is the question. As I said in the past, we had multiple answers coming in, but it is possible to win, and so put in your answer in the shortest space of time and you will have a chance to win a ticket to the Traders Basecamp via the Traders Essentials Kit 50% discount. What tool do we use to accurately measure swing highs and lows here at Master the Markets? Which tool do we use to accurately measure swing highs and lows here at Master the Markets is the question to answer. The fastest answer will come in with the correct answer. It hasn't been put in so far. So we've got, wow, okay, I think we have some winners just there. Fantastic. Okay, so yes, that's absolutely correct. Thank you very much for putting your answers in, and thank you very much for all of you that have entered. I'm just scrolling up the large list of answers just here. Bear with me. Let's see who's got the correct answer in the shortest space of time. Looks like everything has come in at the same time, but according to the webinar environment, congratulations to Alan just there. Alan, congratulations, well done for entering. As far as I can see, you're the only Alan in the room today, so congratulations for entering first. Well, actually, no, I say that, but there are three Allens in the room. So we will send you across a message if you're the winning Andrew, and then obviously let's just type that back. There you go. So I've replied to you and Alan, so you can actually go ahead, send us across your email address and mobile number. We'll be happy to give you the information on how to claim, of course, that prize. So superb, well done. Thank you to everyone for taking part. That's it in terms of my interactive exercise on my presentation. And that's me having gone over the dynamic breakout variations. So we've already started some live trading in real time with real cash. I've shown you 3 out of 6 of the dynamic breakout variations just there, and I've also shown you in depth the trend defining breakouts just there 1 through 6. We've gone over some live market examples as well, shown you what we've taken recently on the live trading room journal in addition to that. I'm happy at this stage to put myself on mute, and that means that we're going to go silent for about 4 to 5 minutes, and this is an opportunity to just grab a coffee, take a break, ask any questions that you want. And what I'm going to do is we're going to scroll up the list of questions now, and we're going to answer everything that's come in that we haven't had an opportunity to answer so far, and any additional questions as well. So if you punched a question we haven't answered, we're going to do that all now. We're going to take a 4 to 5 minute short break, give you an opportunity to ask any further questions that you may have, and after that, of course, more than happy to continue on with the analysis of the pound dollar, and of course with the next strategy, which is the stops to cash intraday trading strategy here at Master the Markets. Putting myself on mute now, give you the opportunity to ask any questions that you may have from what you've seen in this presentation or anything this morning so far, and then let's have a look at the time just here, at 9:10 we will then come back to the screen and we'll look for an opportunity to answer any questions which we may have missed thus far. We'll scroll back up the chart, and of course we will be looking to answer any of those questions. The pound dollar is currently looking strong. You can see the close on the 1 hour bar has finished on the high, and that's a very good signal in terms of upward momentum. So at 10 a.m., according to the exact strategy and the parameters, we will look to trail. We will look to trail the stop loss to minimize the downside. So that's what we'll be looking to do if it hasn't already hit its profit target, which we're now 43 pips away from this morning on the pound against the US dollar. So that's the one just there. I'm going to put myself on mute, give you the opportunity to ask any questions. We'll be back at 9:10 a.m.
Hello everyone. So just back in after Rishi's presentation to you guys on the dynamic breakout, all the variations. These are all the fundamental blocks that you need to build on, because if you do not know the variations itself or how the trend can be segregated, you don't have any model to basically calculate and quantify your trading strategy. And if you do not have that to even build upon, then you have no chance in this game, okay? And I know that 90% of traders do not have a clue on how to even identify and quantify a trend and then build the rules upon it. Now, moving on forward, as you all can see right now, you can see the cable trade at the moment. It's in profit. Now, that's not the point. As most of you know, it is not over till we exit the trade, because all these profits are not ours yet. They're unrealized profits. Just a very quick check so that I know that you guys can hear me. If you can just type in yes into the box if you can see my screen and if you can hear me all right. Matt, okay, that's good. Quite a few of you guys all saying, oh yes, okay. So I think we're good to move on. Now this is live trading week, so I want you all to, we got the advantage of referring back to the screen. So the good thing right now to do is I want to have a hang and a see of where you traders, if you were trading this particular trade, where would you, at which level in this price chart would you like to take your profit out? So if you want to type in into the chat box of what levels you'll be looking at to take your profit out, and then we can see where you're at, and I can gauge also how you analyze the market. So if you want to go in and type in into your chat box what price levels you'll be looking out to exit this trade, please go ahead and type that into the chat box. And if you want to put in any parameters where if it does this and does that with price root probabilities, go ahead and type that in as well. So let me just type in that. I'm not sure, maybe most of you not sure probably where to actually even get out. If that's the case, it's no issue. I'm not surprised actually, because that happens, because 90% of traders don't know what to do and they just hope that their target will be hit. So once again, the question is, what levels would you be looking out to exit the trade? $128.40. It kind of makes sense. I mean, we only got like let me just quickly just do this one, about 0.01% of the people in this webinar even coming up with an answer. I'm just only getting about 1 or 2. This goes on to show that most traders, when you're trading intraday, they do not have any clue about what to do and when to do what, and how methodologically to come up with the answer. Now let me explain to you, right? You see, this is all, you see now I'm kind of getting in another answer of just resistance. Now you see, just resistance itself is not going to help you with anything, right? Because when you're placing the trade, you need a specific level, okay? And the specific level has got to be justified and quantified so that we can consistently take the price out at that particular level and make our consistent profits. Now let me go through this concept, okay? Over here, we just don't talk wishy-washy. We will give it to you in a very quantified, clear, statistical manner. Now let me start my process of rationalization of this thought process of where we would take the trade out and what we should do if price does such other scenarios. Now let's go through this. Now, previous resistance of 12840 is what I've got over here by Matt. Now let's see now, Matt. Why are you saying 12840 previous resistance? You see, another thing is that with 12840, even a previous resistance. Now, the question you got to ask yourself, most traders, is how do you consistently measure that resistance level as well? How do you consistently measure and quantify that resistance point? And when we usually ask that question, most traders would not know how to answer that, and that's when you start to fail, and that's when the subjectivity comes in, inconsistency creeps in. You are saying swing high, but do remember, swing highs need to be quantified consistently. This is why one of our biggest edges in master the market is the smart money indicator. The smart money indicator, where you are seeing all of this swing high, swing low points being mapped out onto the chart, the smart money indicator, which we have been lucky, which have been created by the institutional quant traders. Okay, we were very lucky to come across them, and this is why one of the biggest edges we have, and they spend millions and millions of dollars in actually creating and finding one of the thousands that they found out of the common occurrences in the market. And this indicator, this quantification of swing high, swing lows is so critical. Now, let's go through this thing of how and what we should be looking at in terms of exit levels. Now, you need to first understand the knowledge when we are looking at particular bar by bar trading. Okay, this is called bar by bar trading. All right, bar by bar trading, because intraday, right? You're not holding on to the next day. If you want to hold on to the next day, then it's a different type of analysis. You must always understand what you're looking to achieve from your strategy. Okay, the concept and the objective of a strategy is very, very important. The concept in this strategy over here, the concept of this strategy over here is that we are looking to capture a range. The concept of this strategy over here is that we are looking to capture a range. Okay, a range, a certain range every day. A certain range every day is what we are looking to capture. This concept is very strong, because if you do not have the price moving a certain range every day, you will have not any price movement on the chart. You won't have any price movement on the chart. If it doesn't move in there, what will you have? You will have a horizontal line across the chart. That's the first concept, and that happens no matter for many years, many decades and centuries, however time that the market has existed. That's a strong concept, and we are looking to capture that X amount of range every day. Okay, that's the first point. The second point, what we are looking at in terms of concept as well, in terms of objective, sorry, in terms first concept you must have, then the objective is you want to capture X amount of that range, X amount of range. Okay, so the concept is it moves a range every day, and we want to capture X amount of that range. And in this strategy, we usually look to capture 0.7 to 0.8, unless differently stated. Okay, now let me explain when I would look against this. The second concept that I do want to come across and deliver to you guys is this meaning of the stretch. Okay, of the stretch in a bar by bar analysis. Do remember, traders, that I must mention to you, I have also, in this 10 11 years of being in this trading industry, in the first 1-2 years, I did go to a lot of training companies as well. And a lot of people tell you that price is king, but none of them can teach you how to analyze price just by price alone, just by price study analysis. Now, let me ask you all a question, and I won't be surprised if none of you do know the answer to this. If I were to look at a bar by bar, just especially on a daily or a 4, whatever time frame you look at, there are five key price level points. There are 5 key price level points and studies that you can do on the price action. Do any of you know what those 5 key price study points are? please go in and type in on the chat box if you do know and specify what they are. 5 key price study levels. And these are the ones we'll be going through on at least on an overview level in the Traders Basecamp. There's going to be a lot of value at Traders Basecamp for intermediate and for beginner traders as well. Getting a few answers over here, looking at Ranger, looking at close and all that. I want more specifics. Okay? Because the old Chelsea bars we know is open, high, low, close. But what do you do there? What levels, what parts of the price do you look at? If you look at between two bars, what are the comparisons you should be doing? What would you consider as an upward bias or a downward bias just by looking at two bars or by looking at the bar itself? Price study analysis. How do you do that? I'm talking pure price here, traders. I'm talking about pure price. And please don't be surprised at this point if you get a rude shock to your own system to realize how much of a gap in knowledge you do have at the moment. Because, unfortunately, of how this industry has become, it is very, very difficult to find true, good, quality knowledge. And I know absolutely how true that is because I've been through that journey. Now let me take a look. Open and close. You see, I'm not getting any specifics from anyone here at all. Again, it's about only 5% of the community here which got any even guess. And out of that guesses, 0% of you inside this webinar room know how to give me specifics and quantitative processes. Now let me give you all something, right? Let me give you all something. Let me give you all something. Let me give you all a gift. Let me give you all a gift, right? That probably none of you would know in this room. Not only that, even if you were to go ahead 5-10 years sitting in front of that screen, you will never find out. Let me give you all a gift. Traders, one of our main objectives in this live trading week is not only to trade live in front of you and show you that we know and what we are looking at in terms of the market. One of my main key objectives over here is that I want to raise all your awareness. Raise all your awareness to where you are exactly at. And that might be how much or how little or how really you don't know anything about the markets. Because once you know where you're at, and then suddenly, immediately you know what the gap is to get to where you want to get to. This is what I really want you all to understand, because I don't want you all to be sitting in front of the screen hoping and praying that one day you're going to crack this if you don't know a systematic methodological process. Because I've been there. For 1-2 years I wasted my life, and I don't want you all to do that. Because I know, and in Traders Basecamp we come across people who have spent 10 years, and not made a single penny in the market. Please don't become one of those people. What you need to do is firstly realize where you're at. Be honest to yourself. Be honest. Be absolutely honest to yourself. And realize where you're at. And then, if you want to speeden up the process, find the right people. Find the amazing mentors who can get you to where you want to get to at the fastest amount of time. And once you've assessed their credibility, don't let your old stories keep you back. Move forward. Take that leap of faith. Yeah? Take that leap of faith. Right, now, let's go through this now. Let me give you all something that took me about 5 years to find out, right? 5 years to find out. Now, let me show you some analysis over here, right? Let me show you some analysis. Now, over here is the stats studies, okay? What we call is over here is a PV studies, price volatility studies. And what I'm showing you over here, traders, is only 5%. It's only 5% of what needs to be done. And almost as an individual trader, I will tell you, it is almost impossible. Almost impossible. And that is from my true experience. If you want to go and prove this to yourself, go ahead. And let the time go by. But if something dawns upon you today, and your awareness level increases, then you will start to make amazing shifts in your trading career. Now let me show you something just on one part of the bias. Now we went to go and create different types of biases to see what the probability of the direction for next day would be, right? I'm just going to give you only one. I'm just going to give you one over here. When you come to Traders Basecamp, you get a few more. I and we, as a team in Master the Markets, we will serve you guys. We will run a marathon. We will run 60 kilometers, 60 miles, 100 miles for you if you show me the hunger and commitment from you, right? That's what keeps us moving. Now let me show you. This is one of the bias one comparisons that we did, right? And in the bias one comparison, all we ever did was we looked at the price bar. Now listen to this now. We looked at the price bar, and we will look at the high and the low, and we come up with a range. Okay, we come up with a range. Now in that range, now here's the most important part. Now listen up here, right? Listen up very, very carefully here. Now in that range of that bar, we look for critical level called the 0.5 part of that range, 0.5 MR. We call it the mid-range, okay? 0.5 MR of that range. It is called the mid-range of that bar. So the 0.5 level, right? So if the range of the bar, let me ask you all a question. Let's see if you all have been attentive. This is very important, okay? Because I'm telling you, traders, most of you, I tell you, none of you in this room would have heard of this because I didn't. It will save you a lot of time, but it's only one part, it's 1% of the whole puzzle. Please don't think this is the Holy Grail. Now, in terms of price level studies, the first part is to look at the range and look at this level called the mid-range on the daily time frame, okay, for an intraday basis for getting direction. And I'll give you the rest of the stats later on. You look at the 0.5 MR. So let me ask you a question. If the range of the bar is 100 pips, what would be the mid-range of it be from the low? What would it be? Type it in. Okay, good. So most of you have got that. So you know that that's going to be 50 pips. So let's take a look at this, right? So let's take a look at this. So basically you've got 100 pips here from high to low, and then we are looking at the mid-range, and you're saying from the low to the mid-range should be, from the low should be 50 pips, okay? Or from the high to the mid-range must be 50 pips, right? That's called the mid-range, all right? Now, once you see that mid-range, now here's the next part I'm going to give to you, okay? When that close is above the mid-range, what percentage of the times will it close? What percentage of the times will it close above the high the next day, okay? What percentage of the times will the next day bar close above the high of the previous day, okay? What percentage number of times will the next day bar close above the high of the previous day? Go in and type your answers now. And I know for a fact that most of you, when you'll be typing that in, is just an educated guess, is it not? There's no conviction behind it. Unless you have done price volatility studies, statistical research, statistical validation, then you'll have conviction in what you write. Now go ahead and write it. Now for everybody who's writing in and typing in all those percentages, what I want to find out from you all as well is over how many trades do you think that percentage is valid what you have typed in? Have you all done any statistical study, or is this an educated guess? Please also type that in when you're typing your answers. So I'm seeing quite very, very few answers because I know that most of you don't know the answers. For those of you who have written the answers, about 2 or 3 is all guess. You see, all guess, right? How many of you have done a statistical study to tell that you have the conviction between the stats that you are typing it down right now? There you go, as much as I guess, because over the 10-20,000 people that we have trained and talked about this, it's probably 0.1%, even if that I've seen who's got any type of statistical validation. Because you see, traders, most traders usually fail because first of all, they don't even know what to look for and they don't even know how to carry on the research. This is the awareness what I want to bring upon to you all. Please don't be stubborn and sit in front of the screen, think that you can crack it. It's not possible. I've done it before myself. I've been stubborn myself before. It's just not possible. Now, let me give you all the stats behind it, right? 5 years it took me because I never knew about this until I met the quants. So important. It's so important. If you want to move in any career, the fastest amount of time is the people you hang around with, traders. And especially in trading, it's hard to come across real, true people with true quality knowledge. And when you know and when you see someone with that, grab hold of them and stay with them close. Right. Let me share with you the stats. Just one stats, right? Just one stats. Now, you see over here, everything has been quantified because we have a full-time programmer. 2,372 trades from 2008 to 2017. March, as you can see, 7th of March 2017, I ran the study floor. Previous day high and low taken out, 1,691 trades. 71% traders, 71% of the trades the next day, it will take out the previous day's high and low. It will take out the previous day's high and low. And then as I were to increase on the 0.5 to other levels, then you can see the percentages differ. But you can see over here 71% of 2,372 trades. Now, when you have a stats like that, you will have absolute conviction. But also do remember that is only one part of the whole jigsaw piece puzzle. You need to have first ask the right questions, get the stats validation, then formulate your rules. Tomorrow, on second day, we'll be talking about an edge. Most people always say, yeah, my strategy needs to have edge, my strategy needs to have edge, strategy needs to have edge. But I can tell you, probably less than 1% of them have a clue of what a real edge means, because even intermediate traders who've been trading for 7-8 years do not know how to properly define what truly an edge is, and secondly, what is the true edge of their strategy. The true edge of their strategy. Right. Now, let's take a look. So now just to reiterate, if I were to just take home one stat today, which took me 5 years and giving us a gift today, right? I'm shortcutting your journey. This is what happens when you hang around the professionals. We shortcut your journey. When that close price, when that close of that price action closes above that 0.5 level, right? When it closes above the 0.5 level, there is a 70% chance. There's a 70% chance the next day it's going to take out the high of the previous day's bar. There's a 71% chance it's going to take out the previous day's bar's high. All right? So that's some stats for you. But please don't think this is the holy grail, because if you do think and you go and trade on that, I can tell you from experience and the stats that we got, you will not be able to put any money in your pocket. Understand? Tomorrow I'll show you how you stack up all the probabilities and the power parameters to your side so as to build the edge so that you can make consistent profits with conviction. Okay, right, let's move on. Now, based on that, not only that, there's only 1 or 2 parts that I've given you so far today. Now, I will still analyze so much more stuff in this, because intraday trading, you have to analyze quite a lot of stuff, quite a lot of parameters, quite a lot of statistical analysis that you need to have before you can then come to your conclusion. As you can see in this spreadsheet over here, which I just showed you over here, we've got lots of analysis: time, distance, when does the stretch bar happen, so much stuff that we look at, right? And you do need to have a methodological way of asking those questions before you can come with a conclusion and then to infer the data and then build your strategy based on that. This is what I'm telling you, traders. Most traders won't have a clue how to really build a strong strategy. Now, some of you are asking how many day trade this is. This is just a 1-day trade, right? We will exit it based on time basis as well, because we have time-based studies as well on this. Now, in terms of the trade over here for today, we have to, I can tell you for now, we have to trail our stop loss now for the low of this bar. I'll be trailing my stop loss to the low of this bar right now, okay, on the momentum studies that we have done, okay, on the momentum studies that we have done. Firstly, in one basis, this is an expansive range bar. This is an expansive range bar. The first opening has opened up with a strong basis volume. Anything against that volume and taking out the low of an expansive range bar, I'm not interested in. I'm not interested in. The second thing that I can tell you as well, that on a basis what you can take a look at. This is the 8 to 9 a.m. bar. This is the opening, official opening of the UK session. If the range of this bar, is more than the last 10 bars, during the same time. Okay, so over the last 10 days, during that same time, if this is more than that range, then we will call it an expansive range bar, and especially so if it's 2 times the range as well. And another thing, what you need to look at, price. I'm only talking about price only, traders. No stochastic, no RSI, no MACD, all late. And the reason why you won't find anybody in this training field talk to this level of price is because they don't have a clue as well. Because I know, because I've been around the shop. I have been spending money with all these training companies. But when you ask them specific questions, they're not able to answer you, and they give you wishy-washy answers, which I got sick and tired of. Now I'm giving you specific quantitative answers. Most of you would not be even able to even appreciate what I'm giving you right now. Probably you'll click on later on. But those of you who can appreciate it and can understand and realize your gap of knowledge, you will start to see what kind of information and quality of knowledge you're really getting over here. Now let me tell you one thing, right? When this price bar, you can also look into this as well. When this price bar takes out the high of 2 or more bars, it's also called as an expansive range bar. Let me explain this again. If you have 3 bars going down successfully, right, in succession, and finally then you have a buyer bar come in, and it's got all the volume, and it takes out, look at that, it took out the high of that, and then let's say it moves up much more higher, took out the other high, goes up much higher, takes out this high. Now that is what we call, and finally then closes here, that's what we call an expansive range bar. Strong volume coming into the market. Now, with such a bar, with expansive range and a closing with conviction, which I also gave you ranges to look at as well, when you have such strong price levels to look at, such strong price conviction, then you know that, hang on a minute, if that price now reverses and takes and goes down all the way, why the heck are you in that bloody trade? Get out. It's not about hoping and praying over here. It's about minimizing your loss and taking your profits at strategic level points in the market, and also having to understand the flow of the market and becoming price intuitive. Takes time as well, along with the stance that you do. So in terms of this, that's why we'll be moving our stop to this price point over here at the moment. Okay, to the low of this bar, because it's an expansive range bar, and if price reverses to that, I'm not interested to be in this trade anymore. So in terms of that, what is the price level, the low point of that price bar today? 12777, 12775 is where we will trail our stop loss to right now. Okay, so I will just say that I am trailing my stop loss to 1.2775. All right. Great. So then we have that. So I'll be trading that on my side. 1.2775. Yeah. Okay, that's 0.2846. I'm just trading that at the moment. Okay, so that's done. Okay, so 1.265 is what I've done over here. In terms of the target, I'm going to now alter that to 128.46. 128.46. Do remember, there's a lot of reasons why we do all of that, because I've already shown you some of the stats already. And I look at time and I look at distance. Very, very important. These two must go hand in hand together. But you won't be able to do anything, you won't have a clue how to build those parameters if you don't know how to ask the questions methodologically in terms of your research-based study, and you don't have the stats as well. That's what I'm telling you. It's very difficult to do as one man. We have a team, we have a research team, we have plus programmers over here as well, and we have people who come and refute and break our systems as well. You must have all that in place. Traders, you see, I've come across many thousands and thousands of traders. Me and Rishi have come across many thousands of traders. And you know the saddest thing and the painful thing for me, and which creates so much passion in us, is that when we see traders have become blinded by the nonsense that's going on in this industry, and they also become blinded just by their own facade and illusion that they can break this by themselves. If traders could really break it by themselves, why is Jim Simmons, who makes $2 billion, $2 billion with a B, dollars every year, have the most intelligent minds as part of his research team? Traders, if you want to take this professionally and have the beautiful life where you break that time and money link, where money serves you now, where you don't need to be a slave to time and money, then start getting serious about this whole trading profession. Because I can tell you one thing, traders, from my own experience, every single minute that you put into this market is well worth it. It's absolutely well worth it. Right, because when you finally experience it, when that money flows into your bank account consistently, and you know what you're doing, and you're trading with conviction, and you're trading like a master, and that is when the game changes. That is when you feel the beauty of it. Price level studies, very important, very key. Okay, good. I've got a question coming up here. Could you confirm? Does it matter? Yeah, you see, Tangavelo, I think, quite a couple of subjective, very vague points in your question, which is normal if your mind is not trained to looking into a quantitative basis methodology, which is important for building your confidence and conviction in the market. Let me break down your question right now, right? Could you confirm the 71% chance of taking on a high? First of all, do you even understand what I just told you? I will break it. I will explain that to you once again. Does it matter if the chart is on consolidation? Now, consolidation means what? Because I also have used those terms. What does it mean? You see, consolidation could be, you mean like scenario one, where something goes like that and then comes back down and then this and that. Would you consider that as a consolidation? Scenario one. Or would you consider this as a consolidation, where it consolidates within one engulfing bar? Or would you consider this as a consolidation within the range of 2 bars? So what is a consolidation? You need to analyze first. The next point is, are you talking about when the chart is a trending chart? Now listen to this, right, traders? This is so important. He asked the question is, or when the chart is a trending chart. Now I tell you one thing, listen to this very carefully here. Now here is where 99% of traders fail, because they use this word trending, but they don't have a clue. They don't have a clue of what and how to quantify a trend. What and how to quantify a trend. We go through this in detail in Traders Basecamp. You will open up your eyes, because remember, in these 3 days, you'll be very surprised, and I guarantee you this, to not 100%, 108%. I guarantee you this, that your awareness level and your knowledge will increase in these 3 days of live trading week. Now imagine what will happen in 2 days of full immersion with us in Traders Basecamp. What and how to quantify a trend. Now, firstly, the way you quantify a trend, now this is another one that it took me about 4 years to learn, give you as a gift as well, right? Now, firstly, as a swing trader, when you quantify a trend, is totally different as when you quantify a trend by bar analysis. Totally different. Totally different. Because in a bar analysis, in intraday trading, you're just going to get out the day itself. In a swing trade, you're going to hold on to that trade. That means the trend must hold in a swing trading perspective. In a bar trading, intraday perspective, if you want to just exit within that day, then the trend that you used to look at for the swing trading logically must be different. You need to only look by bar analysis on what that trend tells you. And I can tell you for a fact, no one in this room will know that. And I don't blame you all for not knowing that, because that information is not readily out there. We were very lucky because of the hunger and the passion that we had for trading, that we kept on looking, and we came across the best guys that ever is, quant traders, institutional quant traders, which do price action volatility studies like you've never seen before in your life. And even if I were to explain that all to you right now, none of you probably have a clue what I'm talking about, and none of you are able to comprehend it. That's why we will break it down step by step. I've given you a lot of information today. Definitely go and digest this information today, right? Definitely go and digest the information today. Now, questions. I'm going to ask some questions right now, because I want to see who's really passionate, committed over here, who will really listen to what I've just told you right now. I'm going to ask some questions right now, and whoever gets the questions right, you get our tea kit for 50% discount. Our tea kit for 50% discount, and as part of that, you're also going to get our free ticket to Traders Basecamp, which is part of the tea kit. Now, at this moment, traders, I must mention to you all very clearly and directly. Please don't be thinking down there, oh yes, yeah, like other training companies, when you come to Traders Basecamp, there we're going to sell you, we're going to pitch you. Please, we are traders first over here, traders. As you can already see from our live trading over here that we're doing to you in real time, and all the stats that I've shown you. We're not going to sell anyone there, we're not going to pitch anyone there. In fact, we choose who joins us. In fact, before when you come in, we'll already be giving you a questionnaire to see and gauge how committed you are to trading. And by the level of participation and our engagement and analysis, we will already tell you straightforward that you should not be joining us. You're not qualified to join us. Because you know why we tell that? Not to offend you or whatever. Not to tell you that you don't have aptitude. No. Aptitude is not even important. What is needed is the hunger, the commitment, the passion. And when we see that is not there, it's no point for you to even spend a single penny with us. In fact, we never believe in selling. We believe in people buying. If you want it, if you're hungry, you will get it no matter what, because you know that will get you to where you want to get to. When you wanted to go and buy a jacket, when you wanted to go and buy your clothes, when you wanted to go and buy a holiday, nobody comes and begs you. Nobody comes and keeps on calling you. Nobody keeps on choking it down your throat. You want it. You pick up the phone. You book the flights. You book your holiday. You buy your clothes. Same principle over here, traders. We don't come here and call anybody and beg anybody and tell anybody to join, because you don't do that. We don't do that. When we got such kind of price level studies and we can make money out of the markets, we don't need to do that. I just want to make this very clear because I don't want you all to come down there thinking, you know what, this and that, and keep on giving this over. If you want to come over there, be serious. Be serious about your trading career. Be serious about the future that you've committed to yourself out of this trading. And we want passionate, committed people there. And I won't care. I won't care whether you guys are beginners, no knowledge, you know, or you have intermediate knowledge. If you're honest, honesty is the first part. If you're honest and you're hungry, we will do whatever it takes to get you to where you want to get to. And we'll stay true to that. And you want to keep assessing our credibility? Yeah, jolly well do that. Definitely. Definitely do that. Definitely do that. I'd be more than happy to answer any question that you have. And if there's any question that I don't know, I'll openly tell you I don't know. And I'll definitely ask the people that we hang around with, and I'll come back with answers if necessary. But there's usually not many questions that we don't know, because we've done a lot of research and answers. And if you want to check with me any strategy within these 3 days, any of us, me or Rishi, please do check with us. Because you know why? Because there's not that many that we're not looked at. And if we know that there's something that you're doing which won't make you money, I'll tell you straight away. You know why? Because I really care about you. Because I don't want you to keep on wasting another 5-6 years thinking that strategy is going to work. Right. Okay. So let's go on to the questions. So the question for today, right? Let's see how many of you have been paying attention on. So there was one, let me just type this in as well. There was one statistics that I gave you today. There was one statistics that I gave you today on a particular bias study. On a particular bias study. What I want you to tell me is what was the bias that we spoke about? What was the bias that we spoke about? There was one statistic I gave you today on a particular bias study. What was the bias that we spoke about? Though I don't want the results, I want the bias. What was the bias specifically that we spoke about? If it closes above, what? Nope. Carry on. Keep on going. I'm getting all few answers over here. Yes. So I think the first person to actually get it right is Paul Singh. Okay, Paul Singh. So Paul, if you want to send us your contact details and then your email address and your number, one of our staff will be contacting you shortly. Okay, just your contact details, which is your email and your phone number. You are the prize winner. Congratulations. And once you do that, then our guys will be contacting you. Do remember that the ticket is a 50% discounted ticket, and that includes a free ticket to Traders Base Camp. Okay, we'll be talking more about this kind of price level studies. All right. Right. The next thing, what we are looking at, let me see what we have. Okay, I'll do one more question, right? Now, that bias what we spoke about, is the 0.5 MR range, yeah, the 0.5 MR range, which is the mid-range, basically, the 0.5 of a price bar. So if I were to, okay, good. Now let's take a look at one of these bars, right? So let me just look at it in real time over here. Let me look at it real time. Let's take a look at this bar over here. Yeah, let's take a look at this bar. Right? So now you guys tell me, if I were to take a look at this bar here, and if I were to say that, let's say I've done the calculation, right? So it looks something like this. Okay. So it looks something like this, where it's close above that. Now presume, right? What we're saying is that the 0.5 MR, the mid-range of this bar, high and low, let's say, is at this point here. Let's say it's at this point, okay? So this level. Imagine now that the close of the bar, as closed above the mid-range, Now, what statistics do you know now that I've shared with you just now? What statistics have I showed you just now that if it has closed above the mid-range, what one statistics have you learned so far about the direction for the next day? What one statistics have you learned that I've shared with you that will happen the next day if it closes above the mid-range in terms of direction? I want a bit more specifics. Okay, I believe I'll give the prize to Tina. Tina Ski. Okay. So Tina, if you want to send us your contact details, you're the prize winner. Congratulations. So contact details for your email address and your phone number. Okay. If you were to send us that, and one of our staff will contact you about the price. All right. Okay, great. I'll just go through that again. Okay, right. Let me just, I'm getting a few other questions here as well. Okay, great. Okay. Okay, good. So I have just typed in that to you guys for your contact details and phone number. That is totally now well done for getting that. That's 2 full days spending with us. Now, in terms of these statistics, what I want to just tell you all is that now that it's closed above its mid-range, now, according to our statistical research that we have done, over 2,372 trades, 2,372 trades, there is a 71% chance, 71% chance that the next day bar will take out the high of the previous day's bar, 71% chance. So in that way, I mean, because of probability basis, you just want to take it on the up direction. Okay, you want to take it on the up direction. All right. But of course, this is only one part of the whole strategy. You just can't trade based on that. This will not put the consistent profits in your pocket. Okay. So, but this is one. This is how you build it up. Okay. Tomorrow we will give you more information on how to build a strong strategy with an edge. Okay, great. Okay, I'm getting a few questions now. One of the first questions that I got was from, is this a second day if it passes through the mid-range? The second day is just basically current day today. It's current day. It's current day what we are looking at, isn't it? So this is current day, right? This bar today, traders, hasn't closed yet. Today's Monday bar, right? So this is Monday bar. This hasn't closed. The mid-range where we analyze is the yesterday's bar. In this case, it's going to be Friday bar. Okay, Friday bar. Understand? Friday bar is what we do the analysis. And if Friday bar closes above the mid-range, then there's a 71% chance that on Monday it will take out the high. And in this case, it has taken out the high, right? Cool. Now, next thing is what? I believe that makes it a bit more clearer. Next thing. Now, also do remember, I know some of you are saying this is good information and all that for binary option. Do remember this is only one part. This is just one part of the whole puzzle. If you were to go ahead and just based on trading on this, I would just say good luck to you all. Because this itself won't put money in your pocket. But I'm teaching you a way in how you can approach it systematically and methodologically and build your conviction, and you can trade to make consistent profits. Right? And this is what we're going to keep on building over the next 2 days. All right? Is this a 3-day trade? Not at all. Not at all. This is a 1-day trade. We enter today, we exit today. Enter today, we exit today. Because if it's a 3-day trade, Wayne, it's a 3-day trade, the way I would look at trend and look at direction will be totally different. Where I put my stop loss will be totally different. Time, traders, time is very critical in making money in the markets. This took me a lot of months and years actually before I really understood this, how important the time is. And you do. And it's a must. And probably none of you will even understand this right now, even if I tell you this. All of you must do time-based research studies. And at the moment, probably I know for a fact from the answers that you all are given that none of you have got that. Now, the next one about 71% chance to get high. Yes, okay, yeah, I've already answered that. You give idea long-term trading strategy. That, you see, long-term means what? You need to define to me. Long-term means what? For some people, long-term can be 10 days. Some people, long-term can be 1 month. Long-term can be years. But I can tell you one thing, because we do price. We do price level studies. Whatever that we teach you can be applied across any time frame, any instrument, and used in any strategy. But you do need to do your research. We have indicators to do the research as well by our full-time in-house programmer. That is very important. These are the things we go in detail in Traders Basecamp. Any time that you spend with the professionals, FaceTime is very, very powerful to your progress and career, to getting to your goals. Okay, 74, right, that's all fine. Was that analysis just on cable and euro, or is it forex price action in general? Matt, that was just on cable, but we can apply the indicator to any currency. And at the moment, our elite traders have applied it to 6 other currencies, and we're analyzing all those price action level studies on all of those currencies. It takes time, but every time that I told you, every minute that you spend on this chart is well worth it. Because eventually, when you don't need to take that tube to work, when you don't need to wake up when an alarm clock rings, and when you have to battle those voices within your head saying, you know what, why do I have to go to this work? I don't really like it. I'm not spending enough time with my children. Because when all those voices can be numbed, when this starts working, when you can be at the comfort of your home, or we can be anywhere, and when you can make this work, and you got statistical validation to back you up, and you can choose how much and where you want to go, and the money is not working for you, and that's when your whole lifestyle, your whole perspective of life starts to change. Time gets freed, and you can use it for in whichever way that you want. Next, is this also for 1 hour bar? It can be used in any scenario, but in terms of this strategy, what I'm teaching you over here, we do the analysis on the daily and then bring it to the 1 hour. This is why it's so critical, Bookie, that you have to look at concept first and then the objective of the strategy. Then you got to design your parameters according to what type of strategy you need to design, right? Most traders, 98% of traders, won't have a clue about this. And whenever I ask them, it just takes me 1-2 minutes to assess where you're at. Whenever I ask anybody, what's the concept and objective of your strategy? If you've designed one or you're following one, if you don't know how to answer that, or you give a wishy-washy answer about 10 lines something, I immediately know that you have no chance in making money from your strategy. Sorry to be so blunt, but I'm only saying this because I don't want you to waste time anymore in front of the screens doing something that's not going to work. I'd rather make that very clear to you, and you know now what to change to get to your goals. The reason why I speak as such, and I speak with so much passion, is because I've gone through the pain of just searching and searching and searching and fooling myself that it will work, I will know, I will know. There's no point, traders. Wake up to the reality, wake up to really where we are at, and find the people that will get you to where you want to get to. Assess their credibility, move forward. Right. Now, I guess that actually brings us to the end of day one. I'm actually going to pass on to probably Rishi at this moment. What I want you all to do in this moment, probably take a 5 or 10 minute break, right? 5 or 10 minute break, and 5 or 10 year 5 or 10 minute break. Just have a digestion of all the knowledge, to take a coffee break, take a drink, whatever it is, washroom break, whatever it is, and come back. And if you have any questions at all, also post it into this chat box here, and then we will resume. Okay, just take it for 5 or 10 minute break. Okay, 5 or 10 minute break, 5 10 minute break, and we will resume shortly.
Okay, so we're back here. It's 10:26 a.m., 24th of April, 2017, day one, live trading week. It's Rishi Patel speaking, and currently long pound US dollar. So you can see current price 128.26. We're currently around 20 pips away from hitting our target. We're going to carry on managing that on the WhatsApp broadcast list. So if you would like to receive the updates of how we're going to manage that trade by way of trailing stop loss, there is another stop to trail at 11 a.m. If you'd like to receive that information, we're not going to be on the webinar much longer. So we're looking to close out now in the next 5 minutes or so. But if you would like to receive that information, of course, no obligation. It doesn't really make too much of a difference to us. We just want to show you how we transparently manage trades and log all the information as we're moving through. Tomorrow we'll give an update, and you'll have seen this cable trade appear on a journal, regardless of the result, whether it's a profitable one or a losing one or it's a break even. You'll see it appear on the journal transparently and honestly by way of taking it. You can see on the chat box we called it at 8:02 a.m. before it moved. We're managing it by trailing the stop loss we moved through, and we're telling you how we're adjusting our targets and other bits like that if we are. So it's all coming on the group. If you'd like to receive the updates, you need to add a two-step process. First of all, add the Master of the Markets mobile number to your WhatsApp group, 07456553548 +44 if you're not in the UK. The second step, of course, is to send your mobile number in a message as well, and then obviously we'll be happy to add that on to the broadcast list. You'll receive the updates accordingly. Let's so that if you'd like to do that, send that across. The next thing I'd like to say is that we are going to be holding an end of day trading room at 9 p.m. And in that we're going to be analyzing the 80% RB trade strategy, the dynamic breakout, and the liftoff 2.0. And as a result of that, I'd like to invite you all, as you're on the live trading week with us, I'd like to invite you all into that live trading room as well if you would like to attend. These are the steps on how to register. You need to go across to our website. My colleague Millen will add the website address into the chat box now. You need to click onto this blue box that's denoted just here. That's this blue box just here, and then you're going to need to put your first name in and your email address. As long as you can do that, click getting started. It will send you across the information on how you can join the end of day trading room, which takes place at 9 p.m. It's a 15-minute trading room where we'll run an analysis, and the same way as we're doing today with the pound dollar trade, we will call the market live and place any new opportunities. From what I can see at the moment, there are multiple 80% RB trade opportunities setting up on the market for this evening. So we'll be calling them as we move through the day. If they're still setups, then obviously we'll be looking to place trades around them. So do bear that all in mind. That's pretty much it from me. What I would like to do is at this time thank you all for tuning in on a live real-time basis. The next thing I'd like to say as well is we will be back tomorrow. The start time as normal, 7:30 a.m. I'm happy to take any final questions before we sign out. I'll put myself on mute for a minute or so, and then I'll allow you to ask any final questions before we wrap up the session for the day.